Hey guys, Bob Hertzog, your real estate dad. Hey, wanted to jump in and do a quick little market report, let you know what's going on in the market. I actually recorded one of these about 3 days ago, and things have changed so quickly with some of the data that's coming out that I trashed that one and kind of starting over with some new data that's pretty eye-opening. Okay, there's a lot of the sky is falling mentality out there right now. Obviously, I mean, I don't think the sky is falling. There's just some changes we need to be aware of. And I'm a numbers guy, so we're gonna jump through some graphs that for those of you that are numbers people, you'll enjoy it. Others might tune out after about 30 seconds and say, I can't handle this. So anyway, everything we're seeing here comes from the Cromford report. It's a service that I subscribe to. They are exclusive to Arizona and just follow the Arizona real estate market. So there's nobody in this valley that's got data like theirs. Let's jump in real quick. The first thing I want to look at here is listings under contract. And this is for our mid-range market up to $1 million. So $1 million and below. We have currently this purple line here is 2024. We've got, we're right in line. As a matter of fact, we've been beating 2024, ever since week 11 or 12 down here. So we're looking good there in the under a million market. Now, the difference is we won't get into this today, but I'll just tell you, we've got about 26,000 listings on the market right now. And this time last year, we had about 16 or 17,000. So we have jumped quite a bit in inventory. However, we're moving more homes than we did last year, at least in the $1 million and under market. When you get into this one, let's see, filters, this is Greater Phoenix. So yeah, we don't need to really see that one. This is at I wanted to hit this, the $1 million and up market. What's happened over the last year or so, not quite a year, maybe 6 to 9 months, our average price has been going through the roof here in Phoenix. Not the median price, the average price. The average, and the reason it's been so high is we've had such strong sales in the $1 million and over, especially the $3 million and over range. We've experienced sales that we've never seen in our market before. Obviously, the stock market was doing well, and that makes a big difference on the luxury market, especially the ultra high luxury market. And what you can see here, this is the $1 million or more range. You can see that in 2025, we were kicking butt over 2024. And then all of a sudden in week 11, which I think right now we're in week 17, 16, something like that. So about 4 to 6 weeks ago, this dropped off tremendously, the number of listings under contract in the $1 million and up range. And obviously we can attribute this to what I just said. This is about when the stock market hit the brakes and started to go backwards. So that has dropped a little bit. Average list price per square foot. This is something that I watch very closely. What we call the leading indicator is this under contract list price per square foot. And the lagging indicator is the actual sales price per square foot, what the home sells for. So we were kind of going down on a dollars per square foot basis. Then we kicked it up a notch, dipped a little bit. Now we're starting to come back up out of it. It's going to be really interesting to see what happens with this this is the thing I'm watching the next couple of months to see if this continues on this trend, because what you can see here is, again, this red line is what the homes are actually closing for per square foot versus what the list price, the asking price was when it went under contract. Okay, so again, this is something we need to really watch. But right now we're looking good. list price per square foot is pretty flat, maybe, starting to come up just a little bit. The last thing I want to hit on real quick is what we call the Cromford Index. Basically, the Cromford Index tells us if we're in a buyer's or a seller's market. Okay, so anything above 100 is a seller's market where sellers have the advantage. In other words, there's more buyers than there are sellers. It's a supply and demand. It's a function of supply and demand. So basically, we have right now 9 of our major cities that are still in a seller's market, albeit a very, very weak seller's market. Okay. Anytime you're below 150 on this, if you're between 100 and 150, it's a very weak seller's market. And as you can see, here's where it's trending from last month. Okay. Just about everything is down except for Glendale kicked up a little bit more, into the seller range, as did Avondale. But boy, you start looking at all these other ones and they're dropping, 5%, 3%, 1.86. Okay. Then you start getting, once you start dropping below that line, below 100, you're talking about a buyer's market. And for the most part, this is unfortunately what you see here in the Valley. And it's what I try to tell people to be careful of, especially folks moving here from out of town, is they see the pricing in places like Goodyear, Surprise, Queen Creek, Buckeye, and Maricopa, and they think, oh man, if they've never lived here before, you get a lot more bang for your buck. But when the market shifts, like it is shifting right now, these are the ones that get beat up first. Okay. It's those outlying areas, those outlying markets that get hit the hardest. And then when it comes back, they're the last ones to come back. Okay. Everything starts from the center of the valley. When it comes back, it starts with the center of the valley and moves out. It's 25 plus years in this business. I've watched this market do this over and over again. So then we start getting into days of inventory. This was interesting. This is homes priced at 5 million and above. There's only 500 days of inventory. What that means, days of inventory, is if we didn't put another home on the market, how many days would it take to sell every home in that particular price range? So right now, if we didn't put another home on the market, for 5 million or more, it would take us 500 days to get through that inventory based on the number of sales that we're going through. This orange line is the norm, so to speak, where we should be. And we're half of the inventory or days on or days of inventory that we should be at 5 million or more. I know that not many of you listening to this is going to be able to go out and buy a $5 million house, but it just to show you what's going on. In the million to 5 million range, you can see we're still pretty low on days of inventory. We should be right around that 279 mark, and we're down at 169 days. But this is where it gets interesting. Okay, this is the 300 to a million market, and you can see we're starting to creep up over where we should be. Now we should be around 94 days of inventory. We're sitting at 106. Okay, so as we go down in price, our days of inventory goes up. What does that tell you? That the interest rates are having, that the interest rates have more of an effect as you come down in the price range of the home. So we're picking up more days of inventory. It's taking a little longer to sell that home, okay, that's between 300 and a million than it did, especially say in August of 23. But you can see this has been pretty much going up for the last couple of years, okay? Nothing real surprising there other than it just, you would think that it would affect the $5 million in overcrowd more, but it doesn't. Okay, so this is where it really gets interesting. Homes priced up to 300,000. This is 300,000 and below, guys. Those aren't easy to find, and when you do, they're in pretty rough shape. Look what's happened to our days of inventory, 146 days. It's taking longer. We have more inventory, days of inventory of $300,000 and under houses as we do 300,000 to a million. So Pretty crazy, but obviously these homes are generally very, very much so affected by the interest rates. And quite honestly, a lot of these homes are in pretty rough shape. If you find something for under $300,000, it's it's getting out. It's not in very good shape at all. So anyway, this other one, this is going back to what we've already looked at, but just from a earlier period. So anyway, overall, inventory's up. Like I said, we've got what 27,000 homes on the market right now. This time last year, we had 16 to 17,000. A real normal market for us is in that 23 to 27,000 homes. So I'm not worried about the inventory because, like in this first graph I showed you, we're still cranking them out. 7,800 homes a month are getting sold. So we're still going through that inventory, but it's definitely, it's not cause for alarm, but it's something to pay attention to, that the market is definitely shifting. It's shifting from a seller's market, which I feel like we've been in for 30 years, but it's really only been about 8 to 10 years. And it's shifting to the buyer's market where the buyers are going to have the advantage. What does that mean? Well, sellers are going to have to negotiate more than they are accustomed to. Buyers are going to have to, you can't be afraid of hurting someone's feelings with a quote unquote low ball offer. I hate that term. But we offer our, when I'm representing a buyer, we're offering what the market can bear, and we try to get even a little more off the price. So to me, this is exciting, especially for my buyers that I'm working with right now. We can go out and do some wheeling and dealing right now, whereas for the last several years, our hands have been kind of tied on that. So, and for sellers, sellers need to know that if you're going to put a house on the market right now, it better be in good shape. It can't need a new roof and new AC and new paint and new everything. Okay, that train left the station a long time ago, where you could just throw a house on the market and anyone would buy it. Buyers are very picky right now. I'm noticing it on my listings. We're getting less showings than we're accustomed to, but we're still selling houses. So, everything's relative. If you're a seller right now and you're thinking, gosh, prices are so high, I'm just going to stay where I'm at. Well, you got to remember, you're getting more for your house than you would have. You're getting more for your house that you'll be able to go out and spend money on another home. So even though those homes out there are more expensive, you're getting a lot more than you're used to getting as well. The last 5 years, we've gone up 47% in this market. So, even if we do take a little bit of a dip, a 2, 3, 4% dip in home values, if you're up 47% over the last 5 years, then you're sitting pretty right now. That's a big number. If you're talking 50% growth, if you bought a house 5 years ago for 500, it's probably worth 750 or more right now. So anyway, we're still finding deals. They're out there. Just wanted to hop in and share this data with you. Hopefully it was helpful. And as always, you know where to find me if you need me. Have a great day.